So joining me now in an exclusive interview is Mike Henry, BHP's CEO. Mike, it's great to have you back on the show. Welcome.
Great to be here.
So let's start right there, because you did just put out your fiscal 2025 results. Profit came in a little softer than expected by the street, but you did pay a bigger than expected dividend, and you did say that global demand for commodities remains resilient. Why is that the case? Where are you seeing it?
Look, so we're seeing pretty strong growth in China. They came in over 5% for the first half, and expectations are that they're going to achieve their 5% growth target for the full year. Growth in India, of course, remains a bright spot as well. So underlying demand for our commodities has remained relatively healthy, certainly in the case of steelmaking, raw materials, and in copper. But the real story here in our earnings is how well the underlying business has done. Unit costs of production down by almost 5% versus headline inflation of 3%. And we've achieved record production in both our copper business, where we achieved 2 million tons of copper production for the year for the first time, and in our flagship iron ore business in Australia.
The last time you and I spoke back in February, you were talking about green shoots in China. Does that continue then?
Well, it certainly does in the sense that there's segments of the economy in China that are performing quite strongly. Infrastructure being one of them, automotive another, and these are all metals-intensive sectors of the economy, and so we're pretty pleased with how those are going. And the economy there remains on track in spite of some of the headwinds.
How are trade and tariffs factoring into what you're seeing for this demand for commodities and where they're flowing to, where the demand is coming from across the world?
So it's certainly giving rise to more uncertainty. But at this point in time, it's not having a detrimental impact on underlying demand for the commodities that BHP produces. It's something that we're keeping a really close eye on, of course, as to where it may stimulate further investment in certain jurisdictions or may impede trade flows in others.
So let's talk about some of those investments, especially here in the U.S., especially where copper is concerned with this resolution project that you're working on and have been working on for more than a decade with your partner in this, Rio Tinto. Is this finally close to the beginning of being developed?
We really hope so. This is one of the largest undeveloped copper deposits in the U.S. It's a project that, when it's developed, can supply up to 25% of the U.S.'s copper demand for decades to come. And copper is a critical commodity. It's used in all walks of life. And so we're really excited about the prospect of this project and the support from Secretary Burgum and President Trump to get mining and processing back up and running and going again in the U.S. has been very strong and very welcome.
It looks like there was a land exchange process supposed to happen yesterday, actually. That's been stymied, yes, and held up in the courts. How long do you expect that delay to carry out?
This could be days to months in terms of the administrative injunction that's been put in place. But we're quite hopeful that gets cleared, and we're ready to go. So if the land exchange had occurred, there would be activity on the ground today. And this is a project that's going to create thousands of jobs locally in Arizona. And like I said, it's an important building block in the U.S. achieving better supply chain security for copper, which is a critical mineral.
Yeah. Have you seen a decoupling between U.S. copper markets, steel-making markets, aluminum markets, some of these other commodities domestically because of trade and tariffs and some of the policies that are being implemented versus the rest of the world?
Certainly a bit more volatility in pricing. And this is the uncertainty I mentioned earlier. As speculation has arisen around certain tariffs and then that's been clarified, we've seen prices be a little bit more volatile than they've been in global markets in response to those measures.
Potash in Canada, how is that project going?
So it's going well, and this is another exciting new business for BHP when both phases of it, so it's a two-phase project that we're developing currently, or two phases of the project are underway. Total investment in these two phases is about $11 billion US. When it's fully developed, this is going to supply about 10% of the world's potash markets. And of course, that's going to be critical for farmers right here in the US to help them with growing their products more sustainball. We did have a little bit of an overrun that we announced in terms of costs for phase one of this, or stage one of this project in our results. But we're on top of that, and we'll be seeing first production from that mine in the next year and a half or so.
And finally, how are you assessing the portfolio? Are you still acquisitive here? Are there certain businesses you'd consider exiting?
So look, we've got a great portfolio right now. We like the commodities that we're in. They're commodities of the future. We're in really good assets. We're running them well. And we have this amazing pipeline of growth ahead of us now in copper. So we're expecting copper demand to almost double by 2050, up by 70%. And we have big growth opportunities in Australia, right here in the US, down in Chile, and across in Argentina. And that's starting from a strong base of growth of almost 30% over the past 3 years. And BHP is currently one of the world's largest copper producers, number 1 or number 2. So we've got a lot of growth ahead of us there. And in potash, as I mentioned earlier, another commodity that the world's going to need a lot more of in the coming years.